Welcome to this special deep dive exploration of the new market wizards by Jack Schwager. You and I are going to walk hand in hand into the minds of some of the world's greatest traders, people who defied the odds, built fortunes, and mastered markets in ways you and I can barely imagine. And here's the good news. Their wisdom is not locked behind Wall Street offices or private hedge funds. It's right here. And by the end of this video, you'll have it too. So, why should you care about this book? Here's why. Because 90% of traders fail. But the people in this book are part of that rare 10% who don't just win, they dominate. They think differently, they act differently, and the way they view money, risk, and opportunity is totally unlike the average person. Jack Schwager is a market historian, a futures trader, and one of the best interviewers when it comes to finding the real essence of success in trading. His first book, Market Wizards, changed everything in the trading world. The new Market Wizards, the sequel, is what we're exploring today. Think of it like going backstage to meet the performers of the world's biggest financial show. Let's face it, most people get into trading thinking they're going to turn $500 into $50,000 in a few weeks. But markets don't work like that. And the people who succeed aren't those chasing quick riches. They're the ones who build deep skills, self-discipline, and an unshakable mindset. The New Market Wizards isn't a book of trading secrets. It's a collection of battle-tested principles from real people who've walked the walk. If you're serious about understanding markets, learning from the best, and growing your trading skill, make sure you hit that subscribe button, give this video a like, and turn on notifications. This is not going to be a casual chat. We're going deep. All right, are you ready to begin this journey? Grab a notebook, maybe a cup of coffee, because we're about to step into the real world of trading, starting with some painful but powerful lessons from Jack Schwager's own trading mistakes. Before we dive into the market wizards themselves, we need to start with the man behind the interviews, Jack Schwager. You'd think that after spending years interviewing legendary traders, Schwager himself would be an unstoppable trader, right? Wrong. In fact, his own trading failures are some of the best lessons in this book. Schwager admitted that while writing Market Wizards, he wasn't trading much himself. Why? Because of something every trader must learn. Don't trade if you can't afford to lose. It's not just about the money, it's about the psychology. When you trade with scared money, you're emotionally attached, you make mistakes, and you're afraid to pull the trigger. Schwager tells a story of seeing the British pound in a chart setup that screamed collapse. He hesitated. The market closed. Then, later that night, he shorted anyway. And what happened next? He was right. The market collapsed over 200 points the next morning. Jackpot, right? Nope. Instead of taking profits, he started thinking, I'm smarter than the market. I'll ride this forever. He kept trading, and then lost most of his profits because he got greedy and reckless. It gets worse. One day, Schwager's friend Harvey calls with a can't-miss trade idea. Short the British pound again. Schwager knew it was wrong, but he let greed and peer pressure override his instincts. He lost. Big time. The market kept rising. His friend was dead wrong. And here's the key takeaway. If you can't take a small loss, sooner or later, you'll take the mother of all losses. Trading lessons from Schwager's mistakes. 1. Never trade with money you can't afford to lose. 2. If you feel uncertain, don't trade. 3. Don't rely on other people's opinions for your trades. 4. Be willing to take small losses quickly. 5. Greed turns winners into losers. Schwager's story proves that trading is not just numbers on a screen. It's a mental battle. And guess what? Even brilliant people fall for emotional traps. What makes the traders in this book special isn't that they never make mistakes. It's that they learn and adapt. We leave Schwager's mistakes behind and move into the big leagues. Meet Bill Lipschutz, the man who moved billions, and learn what separates amateurs from the true currency kings. Bill Lipschutz wasn't born rich. He started trading because of inheritance. His grandmother left him $12,000 in stocks. Sounds like a nice boost, right? Well, here's the twist. He sold all those stocks to start trading. By the time he was done, he had turned that $12,000 into hundreds of thousands while still in college. And eventually, he became one of Salomon Brothers' biggest currency traders, moving billions of dollars per day. Unlike stock traders or crypto traders, Bill was dealing with massive macro moves: world economies, interest rates, central bank interventions. But what made him different was his philosophy. It's not whether you're right or wrong. It's how much money you make when you're right and how much you lose when you're wrong. That quote alone can change your whole trading career. Bill's trading rules. 1. Understand the fundamentals, but follow the market's reaction. Bill knew that sometimes bad news can make a market rise, because traders expect the worst and then overreact. It's not the news that matters, it's how the market reacts to the news. 2. Losing is part of the game. Bill was a master at risk control. He didn't mind being wrong. What he couldn't stand was losing big when he was wrong. 3. Know when you don't know. Sometimes Lipschutz wouldn't trade at all, not because he was afraid, but because he respected uncertainty. Imagine having positions of hundreds of millions or billions on the line. Lipschutz would calmly watch the market like someone watching the ocean. He said, "The market is always right, even when it's crazy. Don't argue with it." Most traders fail because they fall in love with their own opinions. Bill didn't. Even the greats miss trades. Bill once missed a $20 million order on the Australian dollar by 1 pip. He admitted it still bugged him. And that leads to another important truth for you as a trader. Missing a trade is not failure. Overtrading to make up for it is failure. Let me ask you right now, are you disciplined enough to miss a trade without revenge trading afterward? Next up, we step into one of the wildest markets of all, futures, and meet some of the toughest, sharpest minds to ever trade contracts. Let's meet the legends Schwager interviewed in The New Market Wizards, starting with one of my favorites. 1. Randy McKay, veteran trader. Randy McKay was all about simplicity. While other traders were complicating everything, Randy's focus was go with the strong trends, cut your losses fast, and size up the moment the market proves you right. Quote from Randy: "When I'm wrong, I'm out. Period. No excuses." How many traders today could be profitable just by following this one principle? 2. William Eckhart, the mathematician. William Eckhart is the opposite of emotional traders. He's a mathematical genius who believed that the average trader's biggest enemy is randomness. And that leads us to a huge lesson. Systematic trading works. Don't rely on gut feelings. Develop a system. Test it. Follow it. Repeat. Eckhart's work with Richard Dennis helped inspire the famous turtle trading experiment, one of the most legendary trading experiments in history. 3. Monroe Trout. Best return, low risk. Monroe Trout was a statistical genius with an obsession for minimizing risk. Most traders chase big wins. Monroe chased small, consistent wins with almost no drawdowns. Lesson: consistency beats flash. Risk control is your edge. 4. Al Weiss, the Human Chart Encyclopedia. Al Weiss was known for his photographic memory of charts. He could recall patterns from decades before. Today's traders have advanced software, but Al Weiss's brain was the software. What does this tell you? Lesson: the market loves to repeat itself. Patterns don't guarantee success, but they give you probabilities. And in trading, probabilities are everything. Futures trading principles. You should steal from these legends. 1. Trade with the trend. 2. Never hesitate to take a small loss. 3. The moment you're right, Press the advantage. 4. Systematize your strategy. Remove emotional decisions. 5. Focus on probabilities, not certainties. Coming up next, we go behind the curtain with the kings of hedge funds, Stanley Druckenmiller, Richard Driehaus, and others. Discover how the world's most powerful investors think. Welcome to the world of fund managers and market timers. The people who don't just trade markets, they move them. Who are these titans? In the New Market Wizards, Jack Schwager interviewed 4 absolute giants in this space. And today, you're going to learn the life-changing principles behind their success. 1. Stanley Druckenmiller, the top-down genius. Stanley Druckenmiller is the master of top-down investing. What does that mean? It means starting with the big picture, global economies, interest rates, central bank policies, and then drilling down into specific sectors and stocks. Quote, "The best investors tend to have the ability to make big bets when the odds are overwhelmingly in their favor." His secret weapon wasn't complexity, it was conviction. Big lesson. When you have overwhelming evidence for a trade or investment, size up. Don't bet small on something you believe in strongly. Be selective, and then be aggressive. 2. Richard Driehaus, the bottom-up maverick. Where Druckenmiller started big, Driehaus started small, focusing on individual companies first, then working outward to see how they fit in the larger picture. His focus was on growth. He wanted companies that were already showing strong momentum, not hidden undervalued gems. Quote, "Buy high and sell higher." Yeah, you heard that right. Not buy low, sell high. Buy high, sell higher. Driehaus believed in momentum. Ride strength, not weakness. He was early on what we today call trend following. 3. Gil Blake, the master of consistency. Gil Blake wasn't flashy, but he was deadly effective. His focus was on mutual fund timing, using mathematics and pattern recognition to decide when to get in and out of funds. Quote, "Consistency is far more important than occasional brilliance." Big lesson from Blake. Forget about the home runs. If you can hit singles consistently, you'll still win the game, and with far less risk of emotional burnout. 4. Victor Sperandio, markets grow old too. Victor Sperandio's big insight: markets behave like living things. They get old, they get tired, they change behavior. He taught that every bull market eventually wears out. And if you can recognize when that happens, you can profit not just by going long, but by going short. Lesson: watch for momentum shifts. Nothing stays hot forever. 4 golden lessons from these fund managers. 1. Have conviction when the odds are on your side. Druckenmiller. Ride the trend. Buy high, sell higher. Driehaus. 3. Focus on consistency over glory. Blake. 4. Know when trends are dying, and don't be afraid to go short. Sperandio. Coming up next, meet the traders who don't just play one market, they play them all. And they do it with Zen-like focus. Stay with me. One market isn't enough for these traders. They dominate everywhere. Welcome to the world of multiple market players. Traders who don't limit themselves to just stocks or futures or currencies. They play them all. And not only that, we're about to meet the machines, the systematic, relentless firms that print profits like clockwork. 1. Tom Basso, Mr. Serenity. Tom Basso was known for one thing above all else: calmness. While other traders panicked during market crashes or spikes, Tom kept an almost Zen-like cool. Quote, "I try to trade in a relaxed, carefree way. If I'm anxious, something's wrong." Why does this matter? Because fear and greed are your worst enemies in trading. Basso systematically designed his trading so that emotions were practically irrelevant. Big lesson. Build systems, automate decisions, detach from your trades emotionally. 2. Linda Bradford Raschke, reading the music of the markets. Linda Raschke was not just a trader. She was an artist when it came to market rhythm. She compared market behavior to music, having tempo, flow, harmony, and tension. While others looked at indicators, she looked at how the market moved, like a musician feeling a groove. Quote, short-term trading is like jazz. There's structure, but it's alive, creative, and responsive. Big lesson. Markets are living systems. Don't trade rigidly. Flow with the rhythm. Adapt constantly. 3 CRT, the trading machine. CRT wasn't a person, it was a firm. Think of it as the prototype of modern quant trading firms. They didn't rely on gut feelings. They relied on algorithms, mathematics, probability, and automation. Quote, we don't predict. We just bet on favorable odds over time. CRT showed that trading doesn't have to be glamorous, it just has to be profitable. Big lesson. Treat trading like a machine. Make it boring. Boring is good. Boring makes money. 4 big takeaways from the money machines. 1. Stay calm. Emotional detachment helps you make better trades. 2. Trading has rhythm. Feel it, don't fight it. 3. Systems work better than opinions. 4. You don't need to predict. You need to play the odds. Coming up next, you could have the best strategy in the world, but if your mind isn't right, it won't matter. The greatest traders aren't just good at charts. They're masters of their own minds. You've heard the phrase before, right? Trading is 80% psychology. Well, it's not a cliche. It's the truth. You can have the best indicators, the most advanced tools, the fastest execution. But if you don't master what's inside your head, none of it matters. Trading is about you. In the New Market Wizards, Jack Schwager dedicates an entire section to this truth. He interviews 3 experts who break down the psychological warfare happening inside every trader's mind. And if you only remember one part of this entire video, let it be this part. 1. Zen and the art of trading. One of the key ideas Schwager emphasizes is letting go of attachment to results. Want to trade like a master? Trade like you're already content. Quote, the goal is to trade well, not to make money. Making money is a side effect of trading well. When you detach from needing a trade to work, you become calm. You stop forcing trades. You stop chasing losses. You flow with the market. 2. Charles Faulkner, the mind of an achiever. Charles Faulkner was a pioneer in NLP, neuro-linguistic programming, studying the mental patterns of successful people. He discovered that top traders didn't just focus on profits. They focused on process, routine, and mental rehearsal. Quote, winners see losing trades as part of winning. Losers see losing trades as failures. That's the difference between someone who succeeds and someone who blows up. Big lesson. Your mind has to expect setbacks, but also trust in your long-term edge. 3. Robert Krauss. The role of the subconscious. Robert Krauss took it even deeper. He taught that your subconscious mind makes most of your decisions before your conscious mind catches up. So, if you don't do the work to align your subconscious beliefs with success, you'll sabotage yourself. Ever experienced this? Cutting your winners short, letting losers run because of hope, breaking your rules, even though you know better. That's subconscious sabotage. Solution: daily mental conditioning, journaling, visualization, meditative focus. 3. Psychological keys from the pros. 1. Let go of needing to win each trade. Focus on the process. 2. Expect losses, but trust the edge. 3. Reprogram your subconscious to support discipline. Coming up next, we bring it all together. The closing bell is near, and we're going to summarize the most powerful, timeless wisdom from all these market wizards. Congratulations. You've just taken a deep dive through the minds of some of the greatest traders of all time. And if you've made it this far, you're already doing something that 95% of traders never do. Investing in your mind, not just strategies. Let's recap the core wisdom we've learned. 1. Trading is not random. Yes, there's noise, but behind it all are patterns, behaviors, and human emotions that repeat. 2. Success in trading is personal. No holy grail, no magic formula. The edge is you, your ability to stick to a process with discipline. 3. Risk management is non-negotiable. Cut losses fast. Press your advantage when you're right. 4. Patience beats excitement. Wait for trades that feel like the money is just lying in the corner, then pick it up. 5. The mind makes or breaks traders. No system can save a trader with poor discipline, and no losing streak can stop a trader with the right mindset. Success in the markets isn't just about making money, it's about who you become in the process. Because if you become someone with discipline, patience, and confidence, you can win in trading and in life. So, what's next for you? I'm not here just to entertain you, I'm here to challenge you. Pick one lesson from this entire video and apply it this week. Start a trading journal. Backtest one idea. Write down the one emotion that sabotages you most and build a plan to overcome it. Here's the truth. You don't have to be perfect. You don't have to get rich overnight. You just have to get better, consistently. What was the biggest lesson you got from this video? Comment below. I want to read every single one. If you want more content like this, deep dives, real strategies, no hype, subscribe now. And if you know another trader who needs to hear this, share this video with them. Remember, trading success is not out there somewhere. It's right here, between your ears. Thanks for watching the New Market Wizards. Now go become one.